The Bitcoin halving just completed, and history has shown that this is the best time to buy cryptocurrency in order to make huge amounts of money in the future. I'm going to share with you my plan to make millions in crypto post halving, and I'm going to show you the 10 altcoins that I have been accumulating that have the potential to go up 1,000% over the next year or two. So now that the Bitcoin halving is done, what happens next? The highly anticipated fourth iteration of the Bitcoin halving occurred a little after 8:09 p.m. Eastern on Friday. Bitcoin traded flat in the immediate aftermath of the halving, holding steady at around $63,000 to $64,000. After the halving, the rate of issuance of new Bitcoin, as well as the rewards for successful Bitcoin miners, are cut in half. So what happens next? Well, in the past, halvings have led to new all-time highs for the Bitcoin price in the months following the halvings. This time has been a bit different, though, as the price of Bitcoin has already reached a new all-time high in the months prior to the halving. It should be noted, however, that much of the recent rally was driven by the spot Bitcoin ETFs, perhaps an indication of the demand created by the market, which may have a greater impact on Bitcoin prices than halving events in the future. The recent run-up in the price in Bitcoin may have been a greater impact from the spot Bitcoin ETFs being approved, not so much the typical halving rally that we normally see. There's still a very good chance that in the next 6 to 9 months, we could see the typical historical rally in Bitcoin as well as other cryptocurrencies due to the halving events, which is a separate rally, or perhaps a rally on top of the rally that we already saw from the spot Bitcoin ETFs getting approved. Now, regardless of what happens to the price of cryptocurrencies, it's important to understand that the halving has the greatest impact on the cryptocurrency miners. The near-term effects of the halving might be limited to the Bitcoin mining sector, where consolidation could occur, as well as the overall hash rate decline due to decreased profitability. That said, there are also indications that miners could have avenues for increased revenue, even if the halving does not lead to a boom in the price of Bitcoin. This increased revenue could come from an increased aggregate fees from transactions spearheaded by recent developments. We're going to talk more about the impact to cryptocurrency miners and do a little bit deeper dive into them in just a minute. First, I want to get back to the price of Bitcoin itself and show you what happens to Bitcoin's price post-halving. And then keep in mind that whatever Bitcoin does, the altcoins usually meet the price of Bitcoin, but they do so exponentially, meaning however much Bitcoin goes up, the altcoins typically go up even more, and however much Bitcoin goes down, the altcoins typically go down even more. Based upon history, the Bitcoin halving could set up cryptocurrencies for long-term gains. During the Bitcoin halving in 2016, we saw Bitcoin rally pre-halving. We then saw the halving take effect, marked on this chart by the yellow dot. We then saw a little bit of a sell-off post-halving before an eventual run-up and rally in the months after the halving. The same exact thing happened during the halving in 2020. We saw a run-up in the price of Bitcoin leading into the halving. Then at the yellow dot marked here on the chart, we saw the price of Bitcoin go down a little or mostly trade flat. And then months after the halving, we saw the price of Bitcoin start to rally. And so far, the same thing has happened now. We saw a rally leading up to the halving. Over the past couple of weeks, Bitcoin has traded pretty much flat, maybe down a little bit. The dot here is pretty much where we are right now, the halving. And so if history repeats itself, Bitcoin will probably trade flat or a little bit down over the next 3 to 6 months before starting a massive rally about 6 to 9 months from now. Now, it's important to understand that past performance is not a guarantee of future performance. There are some technical indicators that show the price of Bitcoin might fall a little bit further than it has in the past. Based upon the short-term technicals, the MACD is about to form a death cross, and based upon the strong prior support level on Bitcoin, there's a chance that Bitcoin could fall all the way down to $44,500 before bottoming out and starting to go back up again. But regardless of what happens in the short term, the long-term trajectory is upward and bullish. But do be aware that in the short term, things are very uncertain. Bitcoin has been trading within a boxed range for the past couple of weeks. We know we're going to get a breakout. We just don't know if it's going to be up or down in the short term. So that's how the price of Bitcoin has historically moved over past halving events. Now, let's do a little bit of predictive analysis to see how high Bitcoin might get by the end of 2024. While the halving event itself should not affect the price of Bitcoin in the short term, many investors are expecting big gains in the months ahead based upon the cryptocurrency's performance over previous halving events. After the 2012, 2016, and 2020 halvings, the price of Bitcoin ran up about 93x, 30x, and 8x respectively from its halving day price to its cycle top. Now, if we extrapolate that, the 93x to 30x was 32% of the previous halving rally. The 8x was 27% of the previous 30x rally. And if we continue the math here, this current rally should be about 22% of the 8x rally, which means the price of Bitcoin would go up 1.75x or up about 75% higher from the current price. That would put the price of Bitcoin at $113,750 by the end of 2024. When you consider the fact that the price of Bitcoin could nearly double in price over the next few months, and you consider the fact that the crypto miners have increased their hash rates with better technology and lower their cost on electricity, all of this means that probably by the end of the year, the Bitcoin miners should be back to the same profitability that they were prior to the Bitcoin halving event. After all, if the rewards get cut in half, but the price of Bitcoin doubles, then the profit to the miners is the exact same. There's no effect against them at all. So let's talk a little bit deeper about the Bitcoin miners, which have had a very interesting 2023 and 2024. All of the crypto miners were up substantially in 2023, with many rallying 500% or more. But in 2024 year to date, many of them are down significantly. In fact, the only crypto miner that's seen a profit in the stock in 2024 was CleanSpark. The rest are down 30 and 40%. But it's important to understand that the mining landscape has changed significantly over the past 4 years from the last halving event. Miners are expected to rely more on higher transaction fees and a potential increase in Bitcoin's price in order to offset the expected decline in revenue due to the reduced mining subsidy, especially in the short term. And now that the Bitcoin halving is here, with it has come a giant surge in transaction fees. The median Satoshis per byte fee has exploded post-halving to 1,805. Pre-halving on April 19th, the most recent median fee was closer to 100. In layman's terms, this means the transaction fees have surged, with medium priority transactions costing $146 and high priority transactions costing around $170. It's not just the increased transaction fees that are going to provide a lot more revenue to the cryptocurrency miners. There are other things they're doing as well. Bitcoin miners have upgraded their power centers and they're starting to get into AI in order to brace for slashed revenue post-halving. Typically, when the halving cuts supply, it leads to huge rallies for Bitcoin. That rapid price increase has helped many miners stave off the worst since it tends to offset the impact of halving the block size in half. Analysts said they expect the halving to have only a modest impact on miners' estimated EBITDA margins, despite the 50% reduction in revenue, since the price of Bitcoin has been trading in the range of 60 to 70,000 and is expected to continue to rise. Analysts from JP Morgan Chase said they think the recent weakness in cryptocurrency mining stocks offers an attractive entry point for investors, and that they are especially bullish on Riot, which they believe offers an attractive relative valuation. Miners have had years to prepare for the halving, including seeking lower power costs and upgrading their fleets to more efficient machines. Riot Platform CEO Jason Les told CNBC that preparation for the halving came down to the company's long-standing focus on achieving a low cost of power, a strong balance sheet, and a significant scale of operations. Les says that's what has positioned the firm to both withstand the halving with positive margins and be well positioned for the upside on the other side of it. Marathon Digital, along with other mining firms, have also begun diversifying their business model into other operations beyond purely Bitcoin mining. What is also different this time around is that the block reward is no longer the primary form of miner revenue. Recent programming innovations in Bitcoin have given way to a huge ecosystem of projects building on top of Bitcoin's blockchain, which has translated to greater transaction fee revenue for miners. So miners are going to be just fine post-halving, and the recent sell-off that we've seen in cryptocurrency mining stocks is potentially a huge buy-the-dip opportunity, and certainly one of the many ways that you can make a lot of money from cryptocurrencies should Bitcoin rally like it has in the past. Now, there are some things that could push the price of Bitcoin higher even faster. We already saw what happened when spot Bitcoin ETFs got approved here in the United States. And now, Hong Kong investment firm Victory Securities has revealed its Bitcoin and Ethereum ETF fees after Hong Kong just approved spot Bitcoin ETFs in that country. It should be noted that the Hong Kong Securities and Futures Commission, the SFC, has not yet published the list of approved ETF issuers. We're still waiting to hear on that. But Hong Kong has become the latest country to approve spot Bitcoin ETFs and spot Ethereum ETFs. As more and more countries approve these, and as the spot Bitcoin and spot Ethereum ETFs come online in more and more exchanges, this is going to cause more and more buying pressure for Bitcoin and Ethereum, which in turn is going to push the price of both of these much, much higher. Now, there are some things that could actually push the price of Bitcoin down. There's always risks in the market. One of those is the fact that China has issued a warning to crypto miners in Angola, telling them to stop mining cryptocurrencies and making it illegal to do so. And the Central Bank of Fiji has warned about penalties for purchasing cryptocurrency, since purchasing cryptocurrency with funds held in Fiji is illegal. And here in the US, JP Morgan CEO Jamie Dimon has come into a little bit of disagreement with their analyst, saying Bitcoin is a fraud and there's no hope for BTC as a currency. JP Morgan Chase CEO Jamie Dimon has doubled down recently on his anti-Bitcoin stance, emphasizing that the crypto is a fraud with no future as a currency and calling it a Ponzi scheme. This comes despite JP Morgan's own analyst telling investors to buy the dip on cryptocurrency mining stocks. Now, that's everything that's happening with Bitcoin and the crypto miners. Let's talk about the altcoins, because history has shown us time and time again that as the price of Bitcoin goes up, the altcoins generally go up much, much faster. So let's talk about some altcoins, and I'm going to show you a few that I think have the potential to go up 1,000% over the next year or two. Over the past few days, Solana, Ethereum, and meme coin prices have blasted off, even as the price of Bitcoin has stayed steady. Dog-themed coins are the biggest winners so far over the past weekend, with Solana-based Bonk charting a massive 37% jump in price over the past 24 hours alone. Other pup-centric meme coins on the Ethereum chain are faring well this weekend too. Floki has jumped nearly 19% over the last day, and Shiba Inu is up 14%. Other hot meme coins at the moment include Ethereum's Pepe, which is up 13%, and Solana-based Dog with Hat, which has climbed nearly 8%. With the price of all of these meme coins rallying, a lot of retail investors are probably starting to jump in again and perhaps getting a little bit of FOMO. The question about these meme coins for you is whether or not to invest. If you do decide to invest, there are three things to consider. First of all, only invest what you are prepared to lose. Meme coins, which are renowned for their extreme volatility, present a high-risk, high-reward investment opportunity, but with any speculative asset, it is crucial to allocate funds that you can afford to lose entirely. You should also be vigilant of changes in sentiment and cautious of pump and dump schemes. Monitor online forums, social media platforms, and news sources for indications of changing sentiment in crypto. Once bullish sentiment disappears, the price of these meme coins tend to sell off rather swiftly. You should also research the history and origin of the meme coin. While some meme coins boast genuine communities and innovative concepts driving their popularity, others thrive solely on hype and internet frenzy. Now that we got the warnings out of the way, let's talk about the 10 cryptocurrencies that I am buying right now, as well as 2 that have the potential to go up 1,000% or more over the next year to 2 years. That said, I want to stress these are cryptocurrencies that I am buying. This is not a recommendation to buy, sell, or hold any asset. Please go do your own research before investing in any crypto. The first cryptocurrency that I am buying is Solana. It is the 5th most popular cryptocurrency in the world. It is up 597% over the past year, but is down pretty significantly over the past few weeks. Solana is still down 17% over the past month, and in my humble opinion, this is a great buy the dip opportunity. The second altcoin that I am buying is Dogecoin. It is the 8th most popular cryptocurrency in the world, and it is up 100% over the past year. Over the past month, it has held steady, only up 2%. It is also down quite a bit from its high a few weeks ago, and in my mind is a great buy the dip opportunity. The third altcoin that I'm buying is Shiba Inu. It is the 11th most popular crypto in the world. It is up 156% so far this year. Shiba Inu has also sold off from its highs a few weeks ago, but is holding steady, down only 2% on the month. The next crypto that I've been buying is Cronos, CRO, which is previously the Crypto.com coin. It is the 30th most popular crypto in the world. And the reason that I'm buying this one is because Crypto.com has seen a huge increase in popularity over the past few months, especially with the marketing efforts that they have done. And with more and more people using the platform, I do believe this crypto is going to continue to rise. CRO is down 6% on the month, and in my opinion is a good buy the dip opportunity. The 5th cryptocurrency that I've been buying is a meme coin. It is Dog with Hat, ticker WIF. It is the 40th most popular cryptocurrency in the world, and it is up a massive 1,637% on the year. And despite falling from highs just a few weeks ago, it is still up 27% on the month. Dog Whiff Hat remains in a bull trend, and I love this particular cryptocurrency as a meme coin that could go up significantly over the next couple of years. The next meme coin that I've been buying is Pepe, ticker PEPE. It is the 46th most popular cryptocurrency in the world, and it is up a massive 2,831% on the year. Pepe is down 25% on the month, and again is a good buy the dip opportunity in my mind. The next meme coin that I've been buying is Floki, ticker FLOKI. This is the 60th most popular cryptocurrency in the world, and it is up 500% on the year. Like other meme coins, it has fallen over the past few weeks. It is down 20% on the month, and I have been buying the dip. The 8th cryptocurrency that I've been buying the dip on is Bonk, ticker BONK. This is the 68th most popular cryptocurrency in the world, and it is up a massive 2,795% on the year. Like other cryptos, it has fallen from highs and is down 9% on the month, and I have been buying the dip. The last two cryptocurrencies that I've been buying just hit the market about 1 month ago, and these are the two cryptocurrencies that I think have the potential to go up 1,000% or more over the next 1 to 2 years. The first of those is BOME, Book of Meme. This is up 1,070% since launch, and it has a very small market cap of only 588 million. It is the 128th most popular cryptocurrency in the world and has a huge amount of room that it can rally. The last cryptocurrency that I've been buying has only been around for about 3 weeks now. It has a very small market cap of 477 million. It is the 220th most popular cryptocurrency in the world, and it is Degen, ticker DEGEN. It is only up 110% since it launched, and in my mind has a huge potential to go up 1,000% or more over the next 1 to 2 years. Now you're probably asking where the heck I'm buying all of these cryptocurrencies, especially the altcoins, since a lot of the exchanges here in the United States do not list them. Well, I am buying my cryptocurrency on something called Crypto.com. Crypto.com has over 350 altcoins that you can buy. It is by far the most number of altcoins available to US investors. If you want to open an account on Crypto.com and buy just $50 worth of crypto, you will get $25 in free crypto so long as you sign up using my referral code. You can get that referral code at weprofit.io/platforms. That's weprofit.io/platforms to sign up for Crypto.com, get that $25 in free crypto, and get access to all of those altcoins that I just listed. So if these altcoins do rally, and they do rally 1,000% or more, when can we expect this to actually start occurring? Well, it's all going to come down to FOMO. It's all going to come down to psychology and investor sentiment. Generally, we do not see a major rally in the altcoins until we see a rally in Bitcoin. Now, over the past weekend, we did see the altcoins rally, even though Bitcoin stayed the same price. So there's a chance that when Bitcoin does start rising, we could see an even faster, more massive rally on the altcoins, especially the meme coins. Now, as far as when that might actually occur, generally, I would not expect investors to start really buying up Bitcoin. I would not expect another massive rally in Bitcoin until Bitcoin's already near the top. It's just a fact of human psychology that most investors do not jump in until Bitcoin is already rallied and everybody is talking about it. And despite Bitcoin hitting a new all-time high, we just haven't quite seen that level of retail involvement like we saw in 2021, at least not yet. So I do think we're going to have to see Bitcoin rise much higher before we start getting that FOMO and that really fast, rapid rally. And I don't see that happening until after Bitcoin gets above $100,000. Now, as far as how fast Bitcoin gets to $100,000, historically, this takes about 6 to 9 months post-halving. So I think that there's still going to be a great opportunity to buy the dip on all these altcoins for the next 3 to 6 months. After that, though, all bets are off, because historically, that is when Bitcoin starts to rally, and by that point, it'll be too late. So I think as these altcoins continue to trade flat, and especially if they continue to go down, this is the time to be buying. It's not the time to get scared or sell out, because this is the best opportunity to buy the dip on these coins before we get that massive rally later this year or early next year.